Snipers, you have to see what's happening in the Bitcoin price this Tuesday, as there are some extremely important support and resistance levels that we have to discuss today, not just for Bitcoin, but across the board with Ethereum and the S&P 500 to give us some early confirmations and a CME gap that I'm going to talk about in just a second. It's been a while, Snipers. I've been working on some brand new content for this channel, so stay tuned for that. But I had to get out this emergency update right now. Smash the like button for the YouTube algorithm if you support this update. And let's dive straight into the chart, Snipers. There's a lot to discuss today. The first thing I want to mention, Snipers, for the immediate short term is the fact that on the Bitcoin CME chart, notice how we have a gap here. The gap is sitting at 16,365. We've yet to fill this gap for Bitcoin. And notice how when Bitcoin formed these new yearly lows, now we're starting to see some upside. We're above the previous weekly open at 16,331. And so what does that mean for Bitcoin? Well, number one, the CME gap has not been filled yet, which means that there is some still potential upside on the table for Bitcoin. But more importantly, Snipers, notice how we are above 16,331. This is the previous weekly open. The fact that we're above it tells us this is the most important support level in the immediate short term for Bitcoin if we want to assume any further upside. Now, 17,204 is extremely important. So far, it's been a resistance level. If we can get above 17,204, that is the early signs of some further upside for Bitcoin. So 17,204 is the major resistance level that Bitcoin is currently facing. And our major support level in the immediate short term is the previous weekly open, which is 16,300. Now, check this out, Snipers. Not only do we have 16,300, but in the macro, the major support level is 13,970. Why is this important? Well, the fact of the matter is when we're below 17,204, the door is open for Bitcoin to test 13,970, or we can just call it 14,000, as that is the only major volume support level that Bitcoin has, being below 17,204. So that is also extremely important to keep in mind. Why is that the case? Well, if we go back to the 2018 rally, notice how 17,204 was a major resistance and 13,970 was also a major resistance. So previous resistance is always support, right? So 13,970 was this bear market rally that we saw for Bitcoin. That was the highest Bitcoin was able to get to before we saw further resistance. And then eventually when the new bull market came, we broke through that, and that led Bitcoin to enter price discovery. So 13,970 is extremely important. The door is open right now to test this level, but I wouldn't expect Bitcoin to cross below this level without at least being able to test it and hold above it for a short period of time. So in the macro, we can call 13,970 the support level for Bitcoin. But in the micro, the immediate short term, if we go into, let's say, the hourly chart, notice how the previous weekly open is the major support level. You can see it was previous resistance here multiple times. And now that we're above it, it is now a major support. So if we can hold above 16,300, then the door is still open for Bitcoin to come and test 17,204, which is the major resistance level right now for Bitcoin. This is the range that we're in. And then, of course, in the macro, the range that we're in opens up the door to 13,970. Now, what are some early confirmations of this next move for Bitcoin? Well, I want to bring up the S&P 500 first and foremost, because you can see here, we are also above the previous weekly open. So 3984 is a major level for the S&P 500. Staying above that keeps the door open for some further upside. And so as long as we don't cross below that coming into the close for this week, that's going to be a very positive sign here for the equity markets, which will translate into Bitcoin. The DXY, for the first time since this parabolic rally, is now below the 20-week moving average. Why is this significant? Well, this is clearly a sign of the DXY starting to slow down. This parabolic rally is not necessarily showing as much strength as it was in the earlier parts of this year. That was not a coincidence. We predicted that here on the Snipers channel because we knew the DXY was facing a decade-long resistance level. And as soon as we came up to test this resistance, you can see since then, we have yet to see further momentum. And not only that, we are now below the 20-week moving average, which could actually say that the DXY is potentially heading into a potential bear market. Now, that doesn't mean it's not going to come back up, form a lower high, maybe even form a higher high, because look what Bitcoin did when it first came below its 20-week moving average after its parabolic rally. Came below it. It wasn't necessarily the top because we did form a higher high, but it was, coincidentally enough, pretty much the end of the bull market, the end of the parabolic rally, coming below this 20-week moving average for Bitcoin. And so I think that that's very important to keep in mind right now. In the macro, the DXY is below its 20-week moving average now. It's not showing strength as it was earlier in this year, which means that that could lead to a potential bottom in the markets, at least in the immediate short term. The DXY does have a potential of maybe coming back up for a lower high, a higher high. That's something that we have to monitor coming into the end of this year. But let's move on to Ethereum, snipers. This could be an early confirmation of the next move for Bitcoin, because the Ethereum to Bitcoin chart is at 70,000 Satoshis, which means it's way above 65,000 Satoshis, and that means it's showing strength. But the Ethereum to US dollar pairing is facing a major resistance here at 1165. This is a volume resistance level, which means if Ethereum gets above 1165, that's the first confirmation that it's ready to come back towards 1277, which would be the next major level of resistance. So that's something that we want to monitor here for the Ethereum to US dollar pair. You can see it's actually below its previous weekly open right now, unlike Bitcoin, which is above its previous weekly open. So that's some food for thought there. Ethereum could still have some potential strength on the table there. We'll have to continue to monitor the Ethereum to Bitcoin chart to get a confirmation of that. Other than that, what I'll say, snipers, is there's still a lot of extreme fear in the markets. If we look at the crypto fear and greed index, and if we look at what's happening with hedge funds right now, Cathie Woods is buying a ton of Coinbase shares, a ton of Grayscale Bitcoin Trust shares. And so there are certainly institutions buying this dip right now. And then the FTX situation, of course, is now behind us. Binance pulled out, and FTX is now filing for bankruptcy. So that obviously is affecting a couple other companies. There's that ripple effect there with Genesis potentially, ready to file for bankruptcy. And that's affecting BlockFi, which Genesis is a major lender for BlockFi. So that's affecting, a lot of other companies. But we all know here on the Sniper channel, the best way to hold your crypto is to keep your private keys in a ledger or a Trezor in a hard wallet. And so, keeping your crypto on some sort of centralized exchange or any entity that is managing your crypto is not necessarily the smartest decision. I'm sure a lot of you guys have heard that many times in the cryptocurrency world. But yeah, snipers, I've got some new content coming out for you guys. I'm working with my team to bring you guys some updated content so that we can revitalize into this next year. And with that being said, snipers, I believe that's all I wanted to cover today. So just to round everything up, the most important levels right now for Bitcoin, we have this previous weekly open here, 16,300. That's extremely important for Bitcoin right now as a support level in the immediate short term. Being below 17,204, the door is open to come all the way down here to 13,970. The early signs would be breaching that previous weekly open at 16,300. Getting above 17,204 is what's going to bring Bitcoin some momentum to potentially even get back towards 20,000 US dollars. So we do want to monitor that. The Bitcoin SPY chart still showing some weakness as it's recently sold off. So not much going on there. And then Bitcoin dominance still very calm there. Ethereum, 1165, the major level in the immediate short term. If we can get above that, opens up the door to 1277. That would be nice to see. But I think the DXY right now is probably the biggest puzzle piece that we want to monitor. Being below the 20-week moving average, there's a high chance we could see another run to the upside. That would allow it to form a lower high or a higher high. But the major support here is 106.56 for the DXY. So as long as we're above 106.56, that scenario is still plausible. If we break below 106.56, then there could be even further downside here for the DXY. But the fact that it's finally coming below its 20-week moving average tells us that it's losing momentum. And I think that's the most important fact there, being below that 20-week moving average, the fact that it's losing momentum. Very important to keep in mind there. So let's see what happens, snipers. I appreciate each and every one of you tuned into the channel. Thank you all for tuning into the Snipers channel today. Smash the like button for the YouTube algorithm once again. Stay tuned for our new content here coming very soon. Until next time, I'll see you guys later. Snipers.